Alright, so here we are once again at mbabullshit.com. So our topic for this video is free cash flow, okay? And or sometimes also known as operating cash flow, or OCF, or free cash flow, FCF. Alright? So remember, you can always go back to mbabullshit.com. Alright, so let's get down to it. So the focus of this video is to know, how financial managers prefer to use a cash flow statement, instead of a net income statement, which is preferred by accountants. Alright? Now, these two statements are very similar, but they are not exactly the same. Alright? So, you'll see now in a while why they are not exactly the same. So, you'll also see why, in order to make a cash flow statement, you must first make a net income statement. Alright? So now, let's get down to it. So as you remember from your accounting subject, if you did take accounting, in the net income statement, you have to include the cash sales, meaning the sales for which you already received cash, plus you have to include the accrued sales. Accrued sales means the sales which you made, but for which you still did not yet receive the cash. So, for example, if you own a burger shop, or a car shop might be a better example for this case, alright? If you sell a car today, and your customer drives the car out of your showroom, that is already considered a sale. Okay, so even if your customer did not yet pay you in cash, alright? Even if he did not yet pay you in cash, as soon as the sale is made or the sale is agreed upon, then it is already considered a sale. And in accounting, you already write that down here, as part of your sales, and you include that as your net, or as part of your revenue in net income statement. And then also in the net income statement, we have to include the cost of sales, and the expenses, right? So if you bought the car and you had to pay for, or you had to buy tires for the car, you have to include that as part of your cost of sales. Now, in accounting, you'll include both the cash expenses and the accrued expenses. What are cash expenses? Cash expenses means if you buy the tires and you pay cash to your supplier, you include that in the net income statement. However, if you buy the tires and you don't pay the supplier yet, then those are what you call accrued expenses, but you already write that down in the net income statement already here. Alright? Now, another main thing which we include in the net income statement is our depreciation expense. So maybe in your car showroom, you had to pay for, I don't know, tables and chairs, and you spent $1,000 on tables and chairs, and you expect the tables and chairs to be useful for 5 years, then you can say that there's a depreciation expense of $200 a year, for example. So that's just an example. It could be any amount. The point is you have to include depreciation expense. If you don't fully understand depreciation, then I recommend that you go back to your accounting subject. Alright? And then after that, we compute the net income before tax. Alright, so let's try it right now. Let's say that you had cash sales and accrued sales combined of $200. Let's say you had cost of sales and cash expenses and accrued expenses and also accrued cost of sales of $70. And you also had depreciation expense of $10. We now can compute your net income before tax of $120. Okay? So this is how much you earn before tax, and this is considered your net income. So take note that this $120, some of it is in cash, maybe, over here, and some of it might be accrued, meaning you did not get the cash yet. Alright? Now, using your net income before tax, you now have to compute your tax. Okay? So, if we assume or pretend, as an example, the tax is 35%. Now remember, it might be a different percentage in your exam. Okay? It depends on your professor. But if tax is at 35%, well then, how much is 35% of 120? It is $42. Okay? So, $42, we subtract $42, that's why it's negative. We subtract $42 from 120, and now we have our net income after tax, and that is $78. So here we have the net income after tax, and as far as accountants are concerned, this is the most important part of the net income statement, right? The reason why you make a net income statement is because you want to find out your net income after tax. Okay? Now, very important. Now, even though accountants think that this is the most important part of the net income statement, okay, financial managers have a different view. Financial managers usually, or quite often, do not care about this net income after tax. Okay? Financial managers also like to make an income statement, but the reason they make an income statement is so that they will know this amount. The tax at 35, the tax amount. Financial managers don't care so much about this, about the net income after tax. They care more about this part of the net income statement. And you will see why in a short while as we go through the cash flow statement. Alright? So let's do that now.